Hey guys, what's going on? Coming at you with a Thursday morning video. Post these daily at 9 a.m. Before I get into it, make sure you like, subscribe, comment below. We're really trying to get the 500 subs by the end of the month, so if you just hit the subscribe button, it's much appreciated. It literally takes 1 second. So I got a lot of positive feedback yesterday about really not talking about a per se stock or what my thoughts were on it. I was more just in general, the economy and how that inflects on the stock market. So yesterday was obviously a huge day. Jerome Powell and the Fed talked about inflation and basically where he thinks it's going. So there's a lot of big reasons obviously with this. If rates get raised or they say inflation is real, sometimes, the stock market would correct heavy. So they really don't want panic or anything like that. But it was a pretty long call. It was probably like 45 minutes long and I listened through the whole thing. But basically they talked about supply issues. So if you're in any kind of industry where they get any kind of material or raw material, metals, really anything like chips, like semiconductor chips and stuff like that, there are a ton of supply issues everywhere globally. It's a nationwide issue. So Jerome did talk about this and he was very transparent about it. Really, this is a short-term issue, right? So if you haven't watched my channel before I get even farther, I'm a long-term investor. So I believe that's the best way to compound wealth over time. I don't day trade, I don't swing trade, I don't option trade, none of that stuff. So if you're a short-term investor, like example, if I really thought the market was gonna be green after today, and I was totally wrong. The market, the NASDAQ, S&P 500, and Dow all closed red today, or yesterday, excuse me. So I would have lost, if I was doing call options that ended tomorrow. I probably would have lost all my money. So that's exactly why I don't do it. So, but as a long-term investor, it doesn't matter what the short term is. Like it could be good or bad as long as you're in good fundamental companies. It just gives you buying opportunity if it goes down. So supply issues. I do think they will come back. Depending on the industry though, it might take anywhere from 6 months to a year to recover. So that seems like a long time, but as a long-term investor where my plays are 3 to 10 years, it's really not a long time. It just gives you, again, buying opportunity. So this will come back. Supply issues are slowly getting better now just because there's vaccines out and stuff like that. So we're good there. Jerome also said inflation was a little higher than he expected. Last time he talked about this in May, he wasn't worried about this at all. He said, yeah, we're right on track. We don't see any higher inflation than what we are predicting per our analysis, our charts and all that stuff. However, he did say it was a little higher than expected. So I think that's why the market went a little red between hearing supply issues, short term. So most people look monthly or bi-monthly in positions. And then this, inflation's higher than expected. So that obviously caused a lot of people to panic. So a good way to look at it is if you look at like lumber costs. Everyone's been talking about lumber, like in the housing market, lumber is 200 to 300% higher than what it was about a year ago. If you look at the lumber costs in the past month over month from like April, May, June, it's going down. The cost of lumber has gone down all 3 months and it's continuing to go down. So that's good. So you can kind of look at that as far as inflation. Obviously, there was a lot of money printed in the spring and early summer of last year. Well, lumber is basically a supply issue, right? But it's short term, but it's actually coming down. So that's a good sign that inflation is gonna go down too, obviously. Long term, the Feds want the inflation number to be 2 to 2.5%. And long term, I mean end of 2022 to 2023. They are, based on their models, they're projected to be around like 2%, which is normal. So that's good. So that means really there's basically no inflation. So that's what they've been saying. They're still holding by that. They were just very transparent on what's going on in the short term, which is good to hear. But the market, the market's very emotional. So when they hear these things, they panic. They think very narrow and short term. It's not really the way to do it if you invest. That's not why it was meant to be. Rates increase. So they talked about increasing rates. In March, they talked about increasing the rates mid-2023 or late 2023. Well, they actually moved it up just due to the economic boom and the vaccines coming out and the surplus in spending, traveling, and really everything. So I mean, I look at it as kind of a good thing, but if you're in the market, if rates increase, the stock market's going to go down because that's just how it works. So he did say his new projection is early 2023. So that's another reason why the market went down. Really, the market, if you're in the stock market, you wanted to hear mid to late 2023. So that would make the market go green because you know interest rates are staying low for a couple years. But that's okay. As a short term, I just look at it as buying opportunity. So if you subscribe to my channel, I'll let you know when I buy things and why and how much I did. So that's another reason why you subscribe. There's going to be a little more volatility short term, I think. So the rates, short-term inflation, it's already priced in basically. So if you're in the market, where the stock market is right now, this short-term inflation has been priced in for a while. This is no surprise. They printed a lot of money last year. Jerome Powell talked about it months ago, how there might be a little short-term inflation. So this is not new to anyone. So where most of your stocks sit right now, this news was already priced in the short-term inflation, what they just said. Some people just don't like hearing it or forget, and they're like, oh my God, let's sell a little bit. So I think in June, July, August, and maybe some part of September, the market's probably going to be really boring and stale. That's my opinion, unless some really bad news or good news comes out, which just have cash in the silently be prepared. But come October and November, I really think you're going to see the true picture of inflation, economic growth, unemployment dropping. You're going to see more of a picture on how things are going to pan out in the fall, which is fine. So I could see us having an extremely strong fall because of the earnings over the summer. I think they're going to be insane. People are going on vacations, they're traveling, they're spending, they're buying, they're moving away from third-party e-com places to buy things and order things. So I just think there's a lot of pent-up demand, and I think a lot of people have a lot of money saved up from not traveling last year. So I think the market's going to be good this year. I think it's going to be good next year, and I really don't think we're going to see any kind of correction. And this just rules out hyperinflation. Like there were some rumors that, oh my God, hyperinflation is coming to print all this money. The Fed's going to have to raise interest rates. The inflation long-term is going to be 4 to 6%. That's not happening. So you can rule hyperinflation out. If you think hyperinflation is coming, there's a 1% chance. So if you think that, do a bunch of puts and you'll be rich as heck. So I don't think there's going to be hyperinflation coming after hearing this. So that's all I got. This is another one of those non-stocky videos, more just what's going on. Again, if you like this video, please subscribe. I'm trying to get the 500 subs by the end of the month. And that's all I got. Peace.